Good day, grade 12s. My name is Carden Madzokere. I'm the author and publisher of the distinction-bound student textbooks, and welcome to 1.7 under international trade, otherwise known as foreign exchange market, topic number 4 of macroeconomics. So it says here, study the graph below and answer the questions that follow. Now in this graph, what we see is extract of South Africa's balance of payment, and this is in billion rands, as you see here. So we have 100, 200, up to 500 billion rands, half a trillion rands. And then here, it's showing us trade balance. So our trade balance, sometimes it's in deficit, sometimes it's in surplus. I see mostly it's surplus, which is a good thing. So this is the first quarter, so a year will have 4 quarters. So each quarter having January, February, March, April, May, June, July, August, September, October, November, December, like that. So we have years 2016 to 2021. So anything below this zero is a deficit. Anything above this zero is a surplus. We also see services on our balance of payment. Actually, on our current account, what we see is merchandise imports, merchandise exports, which when we subtract exports from imports, we get our trade balance. But our formula is different from everyone else's because we have gold recorded separate. So ours would say merchandise exports plus net gold exports minus merchandise imports. So it will give you either a surplus or a deficit, like you see here. We also have on the same account as in the current account, we also have service receipts and we have service payments. We have income receipts, we have income payments. Then we have current transfers. Basically, this is your gifts, your donations, when goods leave a country to the other country without expecting any money in return. So if you give goods to Australia and you are sending them in form of a present for someone's birthday, well, that person will not pay for those goods because it's just a present. So we'll see one direction of this, we'll just see goods moving to another country from another, or money, but then nothing is coming in return. So it's different from exports. So if I sell a car to Zimbabwe from South Africa, it will be recorded on merchandise exports because I sold a car to Zimbabwe. But if I give my dad a gift and I give him a car, now my dad doesn't have to pay me for the car. It's a gift. Well, that then will be recorded on current transfers. Okay. So basically, that's what we see here. Nothing beyond that. The only thing we can point out is that our current account surplus was bigger during COVID periods. This is way too big. Okay, now let's jump into the questions and see what was being asked. Identify any year in which South Africa experienced a trade surplus in all 4 quarters. Okay, let's see here. No. Here, yes. So 2017. My apologies. Well, it's almost 12 midnight. Yeah, and I'm tired. My apologies. So 2017 would be an answer here. Let's see, 2018, wrong because of first quarter. 19, wrong because of second quarter. 20, yes. Well, 21, we don't know yet. We don't have the other ones here. So you cannot answer it. Okay, so we have the answers 2017 and 2020. Number 2, name the balance of payment sub-account represented by the graph. Well, everything we see here is current account. Trade balance, it would say memo item, current account, service receipts, service payments, current account, income receipts, income payments, current account, current transfers, current account. So nothing here says financial account, nothing says capital transfer account. So basically this is the current account. Then briefly describe the term current transfers. Well, I did when I was talking about gifts, donations, and so on. Well, that's that. Then explain the effect on local fuel prices if the rand depreciates. So what happens if the rand depreciates is that it becomes expensive, since fuel is a commodity that we don't have crude oil as a natural resource here in South Africa. We have to import it. So if the rand depreciates, it becomes more expensive for us to import crude oil. So basically, it's going to make our fuel prices to go up. So the effect is that fuel prices would go up. Then how can an increase in interest rates improve? Okay, let's look at this side. Improve the balance of payments. Well, since the balance of payment is a systematic record of a country's transactions with the rest of the world, what happens is if interest rates are high here in South Africa, it sort of becomes an opportunity for other countries to invest in South Africa and get more, like a bigger interest on their invested amount. So we see foreign direct investment increasing, more people, throwing their money into the country as investors, so that they can earn a higher interest, because the interest here in South Africa is high. The other thing that we can see happening is to those who import from borrowed money, they won't import as much. Okay, so they won't borrow as much. So in a way, they won't import as much. So it might then also lead to a decrease in imports. So how that will affect the balance of payment is it will affect it positively, because imports will lead to deficits. And also, if I think about the other side where money is invested, well, that's good. Also, it's going to cause a surplus on our current account, because money comes in as investors want to, profit on the interest that is high. So basically, that's what's going to happen. Okay, let's have a look at our answers to see if they match. Well, 17 and 20, that's what we said. And current account, because we had trade balance, which basically is merchandise imports, merchandise exports, net gold exports. We also saw, what was that? We saw current transfers. We saw in receipts, not receipts, income receipts, income payments, service receipts, service payments. So basically that was the current account. Then briefly describe the term current transfers. Like I said, an item that records the transfer of money, such as donations, gifts, pension from South African residents and vice versa, obviously. And it refers to the transactions in which goods and services or financial items are transferred without economic value received. So these goods, yes, they have economic value, but there is nothing of economic value that comes in return. What comes in return is usually a thank you. That's all. Okay, then explain the effect on local fuel prices if the rand depreciates. Well, importing crude oil from OPEC countries will become expensive, resulting in an increase. So the key word here is increase in the local fuel prices. Then the last one, how can an increase in interest rates improve balance of payments? Well, borrowing may be expensive for households, which will discourage expenditure on imports, reducing the deficit. Okay, that's what I said. Reducing the deficit. How else? Higher returns on financial investments to foreign investors may create net capital inflow. Okay, you see this. Increasing the balance on the financial account, which also, is one of the accounts on the BOP. Then higher interest rates encourage local households to save and discourage expenditure on imports, increasing the trade balance. So bottom line, the trade balance would increase. Okay, this has brought us to the end of our topic, our lesson 1.7. I'll see you in the next one. Thank you. God bless.